See, this is the team.
Ladies and gentlemen, welcome back. We got another chart talk coming at you. It is Monday, March 6th. Market closed pretty flat on the day after a huge bounce to end last week. I don't think we have any real stories to get into. So, Ben, without further ado, maybe we just jump right into the market outlook.
Let's do it.
All right, let's do it. So I got up on my screen the S&P 500. Been in this bear market, obviously, for the duration of 2022. 2023 came off to a positive start, which saw us break above this macro downtrend line. We've seen plague the market all 2022. And now Thursday, Friday, we got a bounce action right where the market is theoretically, quote unquote, supposed to bounce for the technical aspect of this move. What do I mean by that? Let me get this trend line right first. What do I mean by that for the technical aspect? It's, we broke out of this base, then, we back tested it, backing and filling, and we backed into the support. This area has been resistance forever. This 200-day simple moving average has been resistance forever. Now they're acting as support. So you can say the macroeconomic outlook is bleak. It sure is. We haven't had a ton of growth lately. Still seeing the inflation numbers. But I mean, we've been basing for the last, 4 months or so. Now we're at the same price we were at. What is this? May 10th, 2022. 1 year later is at the same price. You look on a monthly chart. It seems to me we're basing. That's what I'm taking this as. So, expect the day-to-day volatility to continue, but we got great information Thursday, Friday in that this area. Thursday's low, where we bounce from, huge inflection point going forward. If we break this area to the downside, that's where you expect stocks to really start puking. If we hold this area and bounce higher, that is very constructive action for another leg higher in the market. Your boy Mike Wilson at Morgan Stanley, I remember you say you used to respect his point of view. Mm-hmm. He's been so bearish forever, like for this whole duration of the market. And then this whole year in the January bounce, he's the one saying, SPY 330 in a year or in the next 6 months, blah, blah, blah. He just capitulated yesterday and today, and it said, expect a huge bull run from here. So Does that mean the top 10 or does that mean the bottom 10?
No, he's good though. He's had pretty good research over the years. But again, it's always when someone like dramatically changes their opinion, where it's always like, it's like the max of the pain of their discussion that it's like, maybe the opposite of that. But,
right.
But again, everything highlighted again in the shakedown, I feel like you did a great job explaining the different, the difference of the breakdown into the base visually, that it was easy for the members to kind of follow along with what you just explained just now. And again, a lot of the sectors had a really big run last week, and today we're kind of like losing a little bit of steam from some of those moves, but it's kind of expected after you have, big 2 or 3 day bounce. It was good to see the 10-year kind of have that little fake out breakout move that we were talking about last week. Again, it's still kind of flagging right in the same area, but good to see that it didn't, continue that run up. It just kind of came back to that little breakout area. But most of the sectors are kind of just all doing the same thing. It's kind of, within their overall basis.
Let me stop you real quick. We're still on my screen. I mean, I got the 10-year up, but here, share your screen.
Yeah. Give me 1 second. All right. So the one big sector, not big, but one that's really setting up, keeping on, is this consumer discretionary sector. We can see this green line. You can see this base here through 250. That's the much bigger base we're keeping an eye on. And you can also see a much tinier or much smaller resistance level through this 250 versus this kind of 240 pivot. And within this sector, the biggest name in the space obviously is this Amazon that's been extremely beaten up this, pretty much all of last year. And we're seeing the same thing. We're seeing this base form down here, and we can see a few different levels. You see that, the bigger base through this 105, this base break. You can see this kind of shorter term one forming through 100 in time. And you have this like smaller little base break through this like 97 area. So if consumer discretionaries is one that could break out in, maybe later this week or into next week, Amazon could be one to keep a closer on, because it's in maybe not the tightest range right now. It's 5-6% from 90 to 97. But keep an eye up through this 97. You have this entry, you have the entry through 100, and that eventual move through 105. And there's plenty of upside for this thing to work its way back towards those prior highs when it's forming this base, like you were highlighting in the shakedown this week when you were explaining kind of the broad market. So just kind of being patient and waiting for these, individual names or sectors to set up, for that potential next leg.
Yeah. I'm definitely with you there.
Well,
right now, I it's just the compiling watch list time. But yeah, you go on, you go. You go.
No, I mean, so the screen shared. We can go over the little take our money challenge. This is week 2. Everyone's been able to add now an additional $100. So everyone started last week with 100. This Monday we were able to add another 100, and each consecutive Monday we do the same thing, so we can grow the account from a capital standpoint, and then try to invest the money the way that we see fit. And I don't know for you, Shake, I think it's been a little hard for us because you have to really pick, like even the price of the stock is really important. So we tend to towards the more expensive names. Now we have to kind of hunt in the bargain bins to, just put cash to work. So for myself, again, I've been focusing mostly on this QSR, buying this up off the support. But again, it's a $64 name. I'm expecting a move back to 68. So I can expect to make, $4 per share on $1 risk, but I can only afford 2 shares. And with the remaining funds, I was able to, basically like the lunch money of the cash in that account I was putting into Snapchat. And it had a phenomenal day today, up nearly 10% as it works its way towards this bigger base. As we talked about, like the Amazon example, through 97, through 100, 105, we have this base you can see in Snap through this like $12.50, $13 area, and then up to this 16. And this name obviously got really killed last year, so it has a lot of room to make up. But any excess, $10-$20 that I have, it's going to pretty much be building into this Snapchat for that bigger move, and then trying to trade the QSR or the ORI, or the one name I took profits in was this Otis, for, I think it was like a 70-cent gain because it's, you only have 1 share. So, up 2% so far. Again, it's
real quick. The beautiful part of that is that you can do that, and it doesn't mean anything. It was only a few years ago where me and you were paying out of the ass for commissions at the prop firm, and then if you wanted to trade, on a regular exchange or whatever, it'd be $7 to execute a trade or whatever. Now you can take profit on a 70-cent gain. It's just saying the environment's a little easier for the retail investor.
Yeah. So what about you, Shake? How's your account doing?
So all I bought is the only thing I bought was this MRO. I bought this Friday. I got three shares, so I'm sitting heavy cash right now.
Okay.
Waiting for my next diamond dandy. I got a feeling. I got a feeling I'm going to the AI boat tomorrow with it.
Okay. All right.
Well, all right. So the thing is that I really like the stock anyway. I like the the institutional volume we saw on the run up. I think it's got that anecdotal story of the AI craze. Everyone's going crazy for anything AI related right now. The earnings, they weren't anything spectacular. I'm not sitting here telling you this is the next, crazy company or anything like that. But technically, what we're seeing is a stock with huge institutional volume on a crazy run up. It consolidates the move. Earnings come out. The stock explodes, 30% higher, 34% higher Friday. So before the market weakened up, before the NASDAQ, started coming in today, this was relatively very strong. This was making new highs. So if the SPY, S&P, or the NASDAQ, whatever we're looking at, it made a move very quickly. Thursday's low, 392 to 407. If it pulls into this 400 area, should be a nice retracement. I'll start looking for longs again there. This AI likely comes down to this 2550 area where I originally entered in my normal portfolio.
Mm-hmm.
And I think that's a very tight risk entry against this 24 for a move up to like 35. Like I think this is going to be able to take those highs out. So still looking at calculated entries. Definitely a high upside or high failure probability stock there. But you see, I'm still attacking it as I would my big account.
Yeah. Yeah. I think the
Yeah.
one thing we're going to see with the transition of this challenge as time proceeds is that now, since the funds are so limited, I think the ideas will be riskier, relatively speaking, because it's like, again, you buy 3 shares of this thing and it drops 20%, you lose $8, not the end of the world. But when we start to get to 2,000 or 3,000, and then that decision could really take the person out of the game, or they could win. I think that's when some of the ideas might get more. You'll see maybe some members get more diversified, or more conservative.
Yeah.
So we'll see.
Well, I think the decision making at this point is funny because it's like, all right, we're gonna add $100 every week. Like, what are you doing taking a 70-cent fucking gain? When in 6 weeks, like that trade it's just like clicking buttons,
Yeah.
So I don't know. It's funny. It's a funny contest. I'm glad we're doing it. I like how it puts everyone on the same playing field and kind of and introduces different methods of how we can quickly build these accounts. And we'll see. It's fun. It's really fun. I like it.
Yeah. So onto some regular
And
trades.
I can't believe that people aren't doing it. Like, how rich you must be. Like, apparently we got
I don't think we've really marketed that crazy just yet. It's only been a few Instagram posts. This is the second week. This will be the second time someone's watched this video, is aware of it. So I think it's more.
Can I give everyone could you give them a recap of what the challenge is? Can I give them a quick recap right here?
Yeah.
Quick recap is, we're all joining this challenge. We're starting accounts with 0, and we're adding $100 every week. And the person who gets to $5,000 first, if it's me or Bennett, the draw for us, it's we're not really winning much. We tell the other person how they have to spend whatever the contents of their account is. Let's say it's $4,000. Bennett wins and tells me to buy $4,000 worth of hot dogs and eat them slowly. I just have to buy them. I don't have to eat them slowly. But if a member wins, if someone else wins, not me or Bennett, they just take the contents, what's in me and Bennett's account, which can possibly be up to $9,998 or whatever it is, 9,999.99.
The closest.
So nothing to lose out there, except you're gonna, be forced to save $100 a week and be in this contest with us. But other than that, really nothing to lose. Crazy if you don't enter it. Literally crazy and stupid. Crazy and stupid.
I was telling someone else, I'm like, you can tell like your friends to do it, and then I'm thinking about it. I'm like, well, why would they want more competition? Like, why would it's like almost counterintuitive. It was like, no, it's like, if you're not a member, we actually had last week, whoever was in second place was a non-member. They were up like 5% or whatever it was, $5. But that would be hilarious. Like, when you can't remember, it's like. Anyways, I have a couple regular real trades. I'll go over really quick.
Right. Take it over, big dog.
All right, so let's see. All right, so I'm keeping a close eye on this KRTX through this 200 level. We've seen this name again. I feel like we keep talking about breakdowns and bases. This name has broken down again. Very strong name, just kind of faded. That that big earn is like I think it was drug related when this thing gapped up, but it's pulled in. You can see this base forming, this consolidation versus between 200 and 180. To keep it very simple. Lately, it's been much tighter. You can buy up. I'm looking to buy up through 200 versus this 190. Versus in the past, you'd be basically buying 200 versus 180. So risking $10 versus risking 20. So you're seeing this base form. You're seeing this horizontal trend line also setting up. So this is the only order I have in the system at the moment. I'm still in this GL. I really think I'm honestly going to get shaken out of this probably tomorrow, just given how perfect this 120 has held for the last pretty much a month now, that like this 120 kind of has to just get smoked. I got added in today through the prior 2 days high, since it triggered off the open and actually looked pretty good. Just faded into the close.
I like that entry, for the record. I liked it.
Yeah,
it just faded to pull in.
Yeah, but it just faded, and it just seems like this. But again, I'm going to lose $2 a share on the first feeler, a share on $1 a share on the second. It'd be very 1.5% loss, not a big deal. It's a blue sky breakout. I'm trying to build into it. I can easily take that loss and have no problem getting back into it. It's QSR again. I've been trying to focus more on these support buybacks as we start to shift into more of this tiny of a base within a bigger base in the broad markets, between 390 being support in the SPY and 420 being resistance. So trying to look for those support buybacks within how the market has been kind of trading. So picked up a decent amount of this QSR versus 63 for now, really 63.50, but just trying to keep it simple from a viewer standpoint. And then to be positioned for this potential 68 breakout. But I'll have no problem taking profits into this should it kind of stall out as it has the last couple of times. And then I just had 2 trades earlier today that I got out of. It's FTV, got traded in late on Friday. Just was a very extended move and just no fall through today. There's no reason, in my opinion, to give a name $2 worth of risk when it goes 50 cents in my favor. So this was a quick little break-even trade, just back on the radar. Just needs to kind of set back up. And that was it on my end. So just keeping a close eye on that KRTX. And then some other ones like Amazon and this AMG up to this 162.50 area. Again, probably going to shake out their support or this little mini pivot, but eventually back through that looks pretty good. So we got 5 minutes left. If there's anything else, you tell me or anything you want to go over.
Share the screen. What was it? So a few things I'm looking at. Now it's like, oh, can you see my screen?
No, not yet. Oh, no, we can.
Okay. Few things I'm looking at. One, still in this LW. It's just cruising along. No, looks great. Every red day it's green. And now I'm just waiting for the most explosive earnings names. Like, for example, I talked about that AI. I'm going to watch this, 25 area tomorrow for potential to add to my position. I got a decent one there. But then it's names like I got to wait around for APLS, for example, just exploded higher on earnings, up 5.5% first day, 13% the next day, 2% that following day, basically 25% move or something like that. Actually, what was that? Whatever it was. This one looks really good going forward, but now it's just kind of consolidate and got to digest the move. Here's the tricky part: is like, do I buy 66 the next time it crosses that level, or do I be a little more patient and wait? And if it takes that area out, I'll let it go without me. That's kind of what I'm wrestling with in my head, because it could use more sideways action. Definitely. I mean, look at these averages, so far down. So we'll see if it crosses that 66 tomorrow, for example. I'll most likely either be small or let it go. I'd love to more sideways, but I mean, you look at a weekly chart on this one. It looks like it's just gonna like eventually rip these highs off the So I like that one. This BC trade of the week. Look at this thing. So this is a weekly chart. Here's the daily chart. Nice little flag forming. Go to the weekly chart. We see that earnings brought it out of this huge base, and this is one I haven't seen in a while. 1, 2, 3, 4 inside weeks. So very impressive there. It just it needs the market to participate. So market pivots. This one should take out that 89.90 area. Be involved there. FOUR. Huge moves on earnings. Great growth in the stock. 1, 2, 3, 4 days up. Had a little bit of reversal today. So I'll be watching this one. If this one wants to pull into 66-ish, that's where I'm going to look to enter. And then this IRDM, similar, explosive buying on earnings. And now it's forming this next new mini range. And, we buy up through this 63 is the next looking entry in this stock. So that's really it. Trying to keep the watch list big but small. Big meaning have my eyes on a ton of names out there, but realistically knowing I'm only going to trade 2 or 3 or 4 of them if they go. Tricky market. We got that pull in today. Probably get some more pull in tomorrow. SPY closed around 404.50. Expecting a retest of that 400 sooner rather than later. But we'll see. You got to take this market a day at a time. Yeah, that's really it. You got anything else you want to add?
I think that's it. I think we covered it all.
Right. Good stuff today. With that, that's all we got for you. Talk to you guys next week.